Well, Treasury futures for sale across the board from the very beginning as a risk-on bias in stocks continues for a second day. Also on the back of a very robust ADP report this morning, also ECI much better than expected. Yields are up about 2 basis points across the curve. 10-year futures have traded in almost a 4 basis point range. 3.163 would be the high yield, the low yield of 3.122. Futures, Treasury futures were weaker overnight as risk assets did rally globally, albeit overnight cash volumes were trading at 83% of the 10-day moving average. The market did last night deal with a lot of negative data points coming out, especially from China with its composite PMI coming out less than expected. Japanese consumer confidence less than expected. Also German retail sales and French CPI regulated for the Eurozone all came out less than expected. But all that, risk assets continue to climb higher. With that, we're seeing futures down on the day and yields ever so slightly higher. Traders realize that 10-year yields are now retraced back within the range that we've seen between June and September. And as such, we definitely are on the upper end of that yield range, or lower end of the futures range. A lot of technicians say that the market for the next few days, few weeks even, will be a lot more technically based, as it seems like the market's not necessarily following fundamentals, looking for a resistance in the yield of 3.24. That would be support for the futures price, and vice versa if the futures should rally, looking for a support zone in the yielding of about 3.06. So a big difference between yield support, yield resistance. But if you look at day-to-day data, it seems like for a variety of reasons, the futures are not following economic data.